Welcome. In this video, XCN coin may increase 410% soon. What should holders do? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
First of all, when there is a descending curve, meaning a trend line formed by the price moving downward over a certain period, this indicates that sellers have been dominant in the market and that the price has been progressing by making progressively lower highs. A descending curve generally reflects that investors are psychologically cautious, that selling pressure remains stronger than buying, and therefore the price fails to reach the previous high with each attempt. However, breaking this structure, meaning the price moves above the descending curve, often signals a new shift in market equilibrium. This is because the price is beginning to break free from seller control, and buyer pressure is gradually increasing. When this breakout occurs, the market often experiences a rapid upward movement, commonly referred to as an attack. The main reason for this is that many investors who had been positioned below the descending curve adjust their positions at the moment of the breakout, shifting from selling to buying, while buyers waiting on the sidelines enter the market as the technical structure is broken. The price breaking the descending curve is not only a technical move, but also reflects a change in market psychology. Investors who have been continuously selling along this curve realize they were wrong when the price breaks it. This can lead to panic position closures known as a short squeeze. Such panic-driven closures accelerate the rise and increase the strength of the price's momentum. At this point, what matters most is how the breakout occurs. If the price breaks the descending curve with strong volume, meaning trading activity increases significantly, the likelihood that this breakout is lasting is very high. Volume always indicates the strength behind a price move. Breakouts on weak volume are usually misleading and may result in the price falling back below the curve, creating a false move. Strong volume breakouts, on the other hand, increase market participants' confidence and encourage buyers to act more aggressively. Another important aspect of the attacks triggered by breaking the descending curve is the determination of technical targets. Investors usually refer to previous resistance areas or Fibonacci levels to project where the price might reach following such breakouts. These targets are important for predicting how high the price can go. Sudden upward movements shortly after a breakout can quickly test psychological resistance levels, and if these levels are also surpassed, the sustainability of the rise is further reinforced. In such a scenario, the market can quickly shift into an upward trend despite being under selling pressure not long ago. This increases investor confidence and attracts new buyers to the market. Breaking a descending curve is also considered a trend reversal signal in charts. The downtrend effectively ends when this line is broken. Of course, the break of a single line does not always guarantee a trend change, but in most cases, it is seen as a strong indication. Investors typically monitor longer-term trend reversals after such breakouts and develop strategies accordingly. These strategies may include placing stop-loss orders at lower levels, setting target prices, and opening new positions. Therefore, breaking the descending curve can represent not only a short-term upward surge, but also the start of a new long-term trend. The psychological impact of this breakout is also noteworthy. Investors perceive it as a turning point. A market previously dominated by selling pressure has now begun to rise due to buyer confidence. This attracts new participants, particularly investors who had been waiting on the sidelines, who gain confidence and enter the market once the descending curve is broken. As a result, liquidity increases and the upward momentum of the price strengthens. In this sense, the descending curve represents not only a technical line, but also a critical threshold for investor psychology and capital flow in the market. The price movements following the breakout are also important. Often the price retraces slightly after the breakout and tests the broken curve, a phenomenon known as a pullback in technical analysis. If the price holds above the broken curve during this pullback, it confirms that the breakout is indeed strong and lasting. This further boosts buyers' confidence and contributes to the continuation of the rise. Conversely, if the price falls back below the curve, the breakout may be false and mislead investors. Therefore, it is crucial to carefully monitor price behavior after the breakout. In conclusion, the descending curve is a very important indicator for understanding market direction. The price breaking this curve generally signals the beginning of a strong upward movement. This is not only a technical breakout, but also a point where sellers lose control, buyers step in, and investor psychology shifts. Breakouts supported by strong volume can indicate lasting trend reversals. Therefore, for investors, these breakouts create strategic buying opportunities and signal that the market has gained a new direction. In such a scenario, the market gaining momentum and moving upward presents a very positive picture, both technically and psychologically, providing a strong foundation for the price to enter a new long-term upward trend. But we cannot rely solely on the curve for analysis. Let's look at other metrics as well. Stay tuned.
When an upward crossover occurs on the MACD indicator, this is generally interpreted as a signal of a potential bullish trend in the market. However, it is important to note that this upward movement usually progresses not suddenly and sharply, but rather more slowly, steadily, and gradually. This is because the core logic of the MACD indicator evaluates prices based on moving averages, and when the short-term moving average crosses above the long-term moving average, it indicates that the market has gained stronger momentum in the short term compared to the long term. This momentum may not immediately appear as a large spike. Instead, the market undergoes a process that gradually signals buyers taking control. Especially after long-standing sideways or downtrending markets, such crossovers help restore investor confidence and gradually increase buying interest. The way investors interpret this crossover is also crucial. For example, if an asset has been under pressure for a long period and the MACD line crosses above the signal line after downward price movement, it is perceived as a reversal signal. However, expecting this reversal to immediately cause a large price surge is not correct. In markets, signals from technical indicators are often absorbed over time in conjunction with psychological effects. Investors typically act cautiously at first, then volume gradually increases, and only then does the price rise become more pronounced. This reflects a slow but reliable start to the bullish trend. A critical detail here is that the MACD indicator is a lagging indicator like moving averages. In other words, by the time an upward crossover occurs, price movements may have already begun to change direction. Nevertheless, this crossover serves as a reliable signal, confirming that the bullish momentum in the market is strengthening. Investors often assess not only the crossover itself, but also the relationship of prices with support and resistance levels, volume data, and other indicators such as RSI to evaluate the strength of the upward trend. This ensures that the bullish trend develops more robustly. A MACD crossover alone can sometimes be misleading, but when aligned with other technical factors, it provides a much stronger signal. An upward crossover on the MACD shows that the market is gaining momentum, and the fact that this momentum starts gradually is actually advantageous for investors. Sudden price spikes are often driven by speculative moves and are usually balanced out by corrections in a short time. In contrast, a slowly and gradually developing upward movement may indicate a longer-lasting trend. This makes such crossovers particularly valuable for long-term investors who prefer steady and reliable gains over rapid profits. The gradual rise following an upward MACD crossover creates an environment that aligns with their investment strategies. Another reason the rise begins slowly is investor psychology. In a market emerging from a downtrend, people typically act cautiously. They do not immediately make large investments at the first sign of upward movement because they fear repeating past losses. Instead, they enter the market with small purchases. Over time, as the number of buyers increases, prices rise steadily. This process confirms the MACD upward crossover signal and clearly shows that the market is gradually moving upward. Large investors and institutions also avoid sudden movements, entering the market gradually and maintaining positions over the long term. This demonstrates that the slow upward trend observed after a MACD crossover is based on solid foundations. Smaller investors gradually recognize this movement and join the upward trend, creating strong bullish momentum in prices. An upward crossover on the MACD is also considered one of the most reliable indicators of trend reversals. However, it is important to note that the price movement following the crossover is typically supported by a period of consolidation. Prices do not surge immediately, they first move sideways for a while and then gradually start rising. This process forms the foundation of a new bullish trend, allowing investors to evaluate buying opportunities more securely. For example, if a stock has been in a prolonged downtrend and the MACD line crosses above the signal line, prices usually first show a small recovery. Then, as buyer confidence increases, prices gradually move upward. The term gradually is critical here, as step-by-step progress indicates that the market is advancing in a solid, less speculative manner. Gradual upward movement allows the trend to continue for a longer period compared to sudden spikes. Another important point is that MACD crossovers can have different effects depending on the time frame. For instance, an upward crossover on a daily chart may indicate a bullish trend lasting several weeks, while one on a weekly chart could signal a much longer-term upward movement. Therefore, investors should interpret the signal while considering the time frame. Even slow upward movements on daily charts can result in substantial long-term gains. Additionally, the gradual rise following a MACD crossover is often regarded as the first sign of a bull market. The market begins with small gains, and as buyer confidence increases, the pace of the rise accelerates. This creates long-term opportunities for investors, as those entering at the beginning of the trend have the potential for significant gains throughout the upward movement. Therefore, when an upward MACD crossover occurs, the slow start of the rise signals that investors should be patient while also highlighting the potential for much greater long-term gains. In conclusion, when an upward crossover occurs on the MACD indicator, it is more accurate to understand that the rise will start gradually rather than expecting an immediate sharp surge.
The cup and handle pattern is considered one of the most closely watched and powerful formations in technical analysis, often signaling long-term bullish trends in the market. The formation typically begins with a prolonged, gradual decline in price, followed by a slow recovery that creates a wide, rounded curve resembling a cup. During this process, market participants experience a significant accumulation phase, both psychologically and technically. Once the cup is complete, the focus shifts to the second stage of the formation, the handle. The handle represents a small pullback after the price reaches the top of the cup, during which the market gathers strength in preparation for a new upward move. Essentially, the handle is a brief pause before a major move. Therefore, the completion of the handle is the most critical phase of the formation, as it greatly increases the likelihood of a subsequent acceleration in the upward trend. An important point to note is that the depth of the cup also determines the target of the formation. According to classical technical analysis, the price has the potential to rise by an amount equal to the depth of the cup. If the price completes its handle, this indicates that the upward move is likely to be triggered. As you mentioned, if measuring the depth of the cup suggests an approximate 410% increase, this represents a very strong bullish signal. The potential for such a large increase demonstrates how effectively the formation is functioning. The cup and handle pattern naturally develops over a long period, and it is not surprising that the breakout following such a long-term process is sharp and rapid. Volume behavior is also closely monitored while the price completes the handle. During the formation of the handle, volume remains relatively low because the market is in a new accumulation phase. However, once the breakout occurs, a sudden increase in volume is observed, which is interpreted as confirmation of the upward move. When this volume surge coincides with the price breaking through resistance, it is one of the strongest bullish signals in technical analysis. Therefore, the handle completion phase is a critical point for investors to wait patiently, as the subsequent breakout is generally rapid, strong, and lasting. Another important aspect is the psychology of the cup. The bottom of the cup represents a phase where investors panic sell and prices struggle to hold at low levels. During this stage, strong hands accumulate and the market gradually begins to recover. As the price moves toward the rim of the cup, confidence returns, buying interest increases, and the price rises toward previous highs. At this point, short-term profit-taking or hesitation forms the handle. Essentially, the handle represents a brief pause in response to the question, will this really continue? Once this pause is complete and resistance is broken, confidence is fully restored in the market and a sharp upward move begins. The greatest strength of the cup and handle pattern is that its target is measurable and predictable. The depth of the cup, according to classical technical analysis measurement methods, indicates how high the price can go. In your example, a 410% potential increase is mentioned, which is a substantial and noteworthy figure. Such a target can signal long-term trend changes and major rallies. For this reason, the cup and handle pattern is regarded as a highly respected and reliable bullish indicator. It should also be noted that the cup and handle pattern is not just a graphical structure, but also a reflection of market psychology. The bottom of the cup contains panic, fear, and uncertainty. As the price slowly recovers, hope emerges, and confidence increases toward the top of the cup. During the formation of the handle, there is cautious waiting. Once the breakout occurs, the market fully enters a bullish phase and the upward trend continues to strengthen. In other words, this formation reflects investor psychology mapped onto the chart. Once the handle is complete and the price breaks upward, this is generally considered one of the most reliable buy signals in technical analysis. At this stage, a strong technical and psychological support has been established in the market. This support allows the price to initiate not only a short-term move, but also a medium and long-term trend. Therefore, investors pay close attention to the cup and handle pattern and aim not to miss the opportunity, especially when the target is this high. In conclusion, the completion of the handle and the approach of the breakout indicate that a very strong upward move is imminent. When the target is calculated based on the depth of the cup, the resulting 410% potential increase highlights the magnitude and strength of this move. This signals the possibility of the market entering a long-term bullish trend and investors achieving significant gains. The completion of the formation is thus not only a technical structure, but also a strong signal summarizing the market's potential going forward.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.